More investment and borrowing activity, as well as lower allowances for bad loans, have helped Singapore's three largest banks wrap up a strong first quarter. Analysts say prospects are bright for the sector despite the resurgence of COVID-19 in some parts of the world.
Singapore's lenders started the year with a stellar first quarter as earnings beat estimates. DBS net profit soared 72% to an all-time high of 2 billion Sing dollars. Not to be outdone, OCBC more than doubled its net profit to a record 1.5 billion Sing dollars. And over at UOB, net profit rose 18% to 1 billion Sing dollars on record fee income. Analysts say the strong numbers mirror their regional and global peers.
We have seen a credible revival of economic growth, and we've also seen a credible a move in terms of vaccine progress and things like that as well. So I think as long as we continue to see these sorts of progress happening, I think there is reason to be optimistic.
The experts add that low interest rates have supported borrowing and that as loan growth conditions improve, banks could gain further from the pricing. Healthier loans also helped DBS and UOB shrink their non-performing loans, while OCBC's held steady.
Banks are sort of network entities, like they see a lot of flows, a lot of capital allocation decisions. So they do have some visibility, in my view, in their investment plans of their clients, right? So I think that optimism for the bank management kind of comes from there.
Analysts say the few weeks of tightened measures are unlikely to impact the bank's performance for the second quarter, but it could still hurt consumer sentiment in the short term.
3 week in itself is not a make or break. I think it is question whether people think that, will it be 3 weeks or can it be extended?
All three bank chiefs remain optimistic about the global recovery this year and are expecting the growth momentum to continue given the strong credit demand in Asia. As for investors, analysts say the strong numbers mean they'll be watching out for any potential rise in dividends.
The uncertainty right now is whether MAS will continue to carry through with the dividend cap that they brought in 2020. Our own expectation is that you will start to see some relaxation for 2021. I think it'll be a fairly high portion of relaxation, given the fact that there is significant amount of capital.
Bank dividends per share for the financial year 2020 have been capped at 60% of the previous years. That's to shore up capital during the COVID-19 crisis last year.